All right. Seems like we're having some good discussions. There's been a lot to learn and talk about, and I want to recognize, too, that we have a council member here who just arrived from Big Island, Jennifer Kitagawa. Congratulations, and thank you for being here. And this last panel is near and dear to my heart because it started February of last year. We all met Auntie Rowena and the good work she's doing on Kauai. And her cousin Irvin was facing eviction. And his rents were going up. He was on a fixed income. We started doing, talking to the residents about what they could do. And actually somebody in the building brought up the concept of a co-op. It was just a concept. But we kept talking to more and more residents and learning more about this cool thing called the co-op. And we started talking to Fred Gibbs, who was introduced to us, the National Association of Housing Co-ops president, and he was so generous with his time. Then we were introduced to David Thompson, who is in the Hall of Fame for cooperative housing and has written, hundreds of articles on co-ops, I'm sure. So we've been introduced to these superstars in the co-op housing world, and they have been diligently helping residents at Waipouli to really try to purchase the building. It is for sale for $44 million. And so, but they've been working super hard on this, like I said, since last summer. So with that, I'm going to turn it over to Lourdes, who's one of our resident board members.
Hello. Aloha. My name is Lourdes Torres, and I just wanted to say thank you to each and every one of you for taking the time today from your life to be a part of this conference. I've been overwhelmed with joy after witnessing so many creative ways in which people are finding solutions to this crisis that we're all facing with the skyrocketing rental prices and the lack of housing in general. I'm here to express my support for the co-op and this idea that the co-op is another solution, like the rest of the amazing humans that have been through this table, and a very viable one because it secures a long-term rental opportunity where when you take out the landlord out of the picture and the for-profit of the regular traditional ways of acquiring a home, and it's not motivated by that profit, you create a living environment that's free of stress and that the owners who own a share of that property have full control of their lives and what happens in their homes in terms of rental increase or what did they decide to use their monies for in terms of creating recreational spaces or building other community, which we've seen that community, building community is so critical to a successful housing situation. The co-op provides that. Not only stabilizes the rent, but also gives the power to the people living in that housing to make decisions collectively. So you have the power of creating a community that is stable long-term and that you can also leave to a successor, which is very critical in this point. I want to just share my experience at the Courtyards in the next few minutes, if I may, please. And it is that recently I lost my home in Kauai, which I owned for 18 years, shortly after COVID, because I lost my business after COVID. And I experienced temporary homelessness. And I thought that that wouldn't happen to me because I've always been employed and I've always taken care of my family and being able to provide. But I had a business plan and COVID had another plan for us, you know? And so I lost my home and I was searching for a new home on Kauai, and I came across Courtyards at Waipouli that I thought was a affordable housing. I didn't know that it was an affordable housing situation for only 10 years, and that the protections of the affordable housing was lost a year or two ago, I believe. So when I moved in there and I applied and I got an apartment, I was so excited because I was gonna finally have stability and I was gonna rebuild and reinvent after all the losses of COVID. And then shortly after, just months after, I started seeing these notices from Kenna guys and her group about an eviction. Because when I filed the application and I got the apartment, the manager never made mention of that every single resident in that Courtyard complex, all 300 of them and 80 households are already been evicted. We've got an eviction notice. And that was so shocking. It was truly shocking to me. So I just want to say that at the same time that I was shocked that I am evicted, you know, that I have to find a home along with 80 other people, you can imagine 80 families, 300 folks, all looking for housing at the same time in Kauai. It's a crisis. It really is a housing crisis for those folks. But then when I met Kenna, immediately I was filled with hope. Even though I have tremendous anxiety, I was filled with hope because I felt empowered when they asked me to join the provisional board and be an advocate and voice my opinion. I felt good about that. I felt good about being a part of the solution and not only just sitting home wondering about the problem and how do I learn how to live in a tent, like the young lady said here, you know, and carry my water and a generator. I've never operated a generator, but I'm happy to do so, and I'll be very happy in a tent if that happens to me. But right now, I want to focus on the co-op thing. The co-op piece of this, I think, is so critical because we've never had one in Hawaii, but I am a product of one in New York City. I was raised when I was very young in the largest co-op in the world, and because of it, my family benefited from tremendous stability. And I was able to have a beautiful childhood that was, you know, the working class. I mean, we understood, we didn't have excess, but we had all our basic needs met. And I understand that at the molecular level, that the co-op model is a great solution. And so I want to say I support it, but I also want to be a part of getting there. And so I want to say thank you to Kenna for leading us and guiding us in how to become a strong advocate and how I can reach the other residents.
And so I want to really, really mahalo Fred, coming all the way from Kansas City, and he's been helping us since last September, guiding us, and just cheering us on. So I'm going to turn it over to Fred.
This one works. Thank you so much, Kenna. And good afternoon to everyone. I will share with you that the National Association of Housing Cooperatives is an apex organization that has as its mission to promote housing cooperatives as the most economical form of home ownership. To that end, we train housing cooperators all over the country. We have a committee called the Development and Preservations Committee, whose job it is to work with housing cooperatives, providing technical assistance for those that are at some point in their lifespan facing trouble. But then more importantly, and more appropriate to this conversation today, that committee works with folks who are desiring to create new housing cooperatives. David has a great deal of history that he can share regarding development of housing cooperatives that goes back many, many, many years. But I will tell you that in the most recent past, the National Association of Housing Cooperatives has seen some really great success. There have been, over the past 8-10 years, there have been a lot of housing cooperative development for seniors. And that's something, it's a model that an organization in Minneapolis had thought of. They got it blessed by the Department of Housing and Urban Development. They got funding and all of this in place, and it works out really well. There still remained a gap in the provision of housing cooperatives, and that is for families, because that's something that is needed. The financing is difficult, has been difficult, because in the housing cooperative, by its nature, doesn't provide a lender collateral in the traditional way that that lender is looking for collateral, because you have all of these people who own, in this case in Waipouli, all these people who 80 families who are going to own this community, 80 families who are going to be responsible for that blanket mortgage. But 80 families don't have to individually qualify for that mortgage because they're taking that mortgage together. Lenders traditionally have trouble with what I've just explained because it doesn't meet their model. And so part of what the NHC does is advocate. We're in the advocacy role with lenders, with policymakers, with even when it comes down to enforcement of our governing documents, with those persons in judicial positions to explain what the housing cooperative is and to help find support. NAHC also has, as I said, seen some success recently. We've, in the state of Washington, there is a housing community that has been developed. It has gone completely through the process for the loan that is insured by HUD. It's called a 213 loan. That housing cooperative is going to be one that is for families. It also has a commercial component because there's going to be commercial space on the first floor, and then the other 3 floors will be residential, and I believe it's slated to be 80 units. I will have the great distinction of being able, my company, to be able to be the management company for it. In housing cooperatives, there is an opportunity for those cooperators to decide how their property, how their community is going to be how it's going to be governed, how it's going to be managed. And in some cases, with working families, there isn't enough time for them to do the day-to-day management piece. And so they'll hire companies like mine to do that. But more importantly, they will be the governors of their own cooperative. They, as Lourdes was saying, they then have control. Now, by control, what I mean is we're providing housing at cost. That means that in the housing cooperative world, we don't call it rent, we call it carrying charges, because that is exactly what it is. You're carrying the cost of your operations. So if that housing community has a operating budget that is set at a particular amount, that amount will be divided equally among the shareholders and members. At some point, if you want to make improvements, if you want to increase the amount of reserves that you have the ability to do that. You have the ability to make decisions that now, in a rental situation, are being made for you. Okay? And so this is the benefit of the housing cooperative. And I was listening to all of the presentations before we spoke, and I was just, I was sitting there just at the edge of my seat because I could see that the housing cooperative is a solution to many of the issues that were mentioned here today. And so with that said, I'm going to tell you a little bit about the cooperative principles, and I'm going to get back to my presentation that you can't see, and then it's right there. The housing cooperative operates by 7 principles, as do all cooperative businesses. And by the way, housing cooperatives are just one part of the cooperative economy. I personally serve on the board of the National Cooperative Business Association that is responsible for cooperatives of all sectors in 17 countries. The 7 cooperative principles are voluntary and open membership. Number 2 is democratic member control. Number 3 is members' economic participation. Number 4 is autonomy and independence. Number 5 is education, training, and information. Number 6 is cooperation among cooperatives. And number 7 is concern for community. What I feel is one of the most important of the 7 is number 5, education, training, and information. The reason why cooperatives do succeed is because their members take the time to educate themselves, to educate their members, and the community around them, especially those persons who are there to provide they're there to provide services to them. In the United States, there's over 36% of households are renters. The downside to that is it becomes unaffordable very quickly, as Lourdes just explained. With cooperatives, there are lower upfront costs. You also have the ability, as I explained earlier, to predict your monthly payments. There's long-term affordability. You can create a limited equity co-op, and it can be affordable in perpetuity. There is protections against displacement because there's no one to displace you because you are your own landlord. The stability is there because there is no one to displace you. And then you have control over your community. The last item that I want to mention, and these are some comparisons to rental. And this is important because we do need to understand the distinction between the housing cooperative model and the rental community. Because what I've learned in the years that I've worked in housing cooperatives is that even persons who are participating in cooperatives sometimes lose the mission, and they take on what we call rental mentality. The rental mentality is one that says, and it expects someone to do for you when you're actually charged to do for yourselves. One of the features of housing cooperatives as opposed to renters is you are an owner. Even though you do not own a piece of real estate, you own a share in that cooperative, you are an owner. That changes the way that you look at your housing situation. As I said earlier, you have monthly costs or carrying charges as opposed to rent. You then build equity. You have the ability to make decisions that impact your life and the lives of those that are around you. I listened to the group that was here just before we got up, and I listened to the agency that they operated with in making decisions of their own. The young lady that was at the end said she felt free in her community. And I charged that what they explained to me sounded like a housing cooperative. It may not be housing cooperative in the traditional sense, but it sounded like people cooperating in their housing situation. I will tell you that, and basically as I wrap, I will tell you that it is very important for communities like Lourdes' community to receive support from everyone that has a voice, because it's really important that people have the access to this housing choice. It's an economic model that works. As David will explain, it has worked for many, many years, and it will continue to do so as long as there is support within the communities. And these are the takeaways that I want you to leave with. Cooperatives do meet the need. And that is a very large statement because I've heard a lot of need as we've been sitting here today. Cooperatives can be permanently affordable. There is collective ownership, and which is a different form of ownership. Each member has autonomy. You do have the control, and as Lourdes explained, you don't have that feeling of hopelessness. There's democratic control. As we know, democracy isn't always a pretty thing. It can be difficult, but when we use that in our housing choices and we're making decisions together, we'll have success. And lastly, I want to share this one piece, and that is that housing cooperative shares, just like the home, if you had a single-family home and you wanted to will that home to your daughter, your son, your grandson, housing cooperative shares are inheritable. And so this creates generational wealth. And so it's a matter of passing agency to the persons that are coming behind you, and that is very important. That way, you can ensure that there will be housing for those that are in the next generation. That's all I got to say about that.
While we wait for the slides to come up, my name is David J. Thompson. I'm living in Davis, California. I grew up in a cooperative household in England. My mom and dad both worked for the co-op. My mom worked in the department store, and my dad worked in the bakery. It was just part of my life. I thought it was a wonderful thing, and anywhere I went in England, I joined a co-op. The first record record album I bought from a co-op in London. There was a co-op set up for military officers, but you could just go in the door and buy things anyhow. So Come Fly With Me was my first album. Okay. Some of these things have been covered, so I'm not going to repeat those that have, but these are all of the details that make a housing cooperative different from other forms of tenure. And one of the additional advantages is, under the law, cooperative members are allowed to deduct the mortgage interest and you see the other carrying charges that they have from their taxes. Now, when Trump changed the tax law a number of years ago, he removed the ability for low-income people to use that as a deduction for their cooperative. So it's only the higher income people now that can claim that for the most part. I'm going to talk about Dos Pinos Housing Cooperative, which was created in Davis in 1985. And at the time, my wife, Ann Evans, who is here, was mayor of Davis, and she helped make this happen. Thank you, Ann.
Do you want me to advance your slides?
Hmm?
Do you want me to advance your slides?
Oh, sure. Sorry. I'm not looking up there. So in terms of limited equity cooperatives or any kind of cooperatives, they can be apartments, they can be townhomes, they can be cottages, they can be single-family homes. It's just what kind of co-op you want to do. Here in Oakland, for example, no, not here in Oakland, but because Oakland came up today, there was one co-op created out of single-family homes. These homes are all in the direction of where they wanted to build a freeway. And people came up to them and said, well, let's keep the homes and move them somewhere else and turn them into a co-op. So these wonderful Victorian single-family homes are where that began, and there's about 80 of them, and most of them are duplexes or triplexes, but I thought it was a wonderful way for a community to stay together. That's in West Oakland. Then, a lot of manufactured home parks, mobile home parks, are trying to become cooperatives because the cost of rent is going up so much that lots of people are losing it. And in a mobile home park, you lose your home when you are kicked out of the park because usually you have nowhere to take it, and the owner takes your home as a way of paying for whatever you owe him or her. And so I helped a mobile home park in the next town to Davis, 150 spaces. The rents were going to go up 10% per year for 3 years. And I said to the council members, you know, the residents could buy this with your help. And the city of Woodland put up $1 million to help the tenants buy the park. And they did, and it's been very, very successful. There are hundreds of mobile home parks in New Hampshire because New Hampshire has a particular state law that gives residents the ability to counter any offer for the mobile home park. So there are now, I think, about 150 parks housing about 8,000 units there. All right, we'll move to the next one. Buyers and sellers have lower transaction costs in a co-op because it's not a real estate transaction. So there's no realtor involved, there's no mortgage involved, there's no title company, nothing at all like that. It's just you sign on the dotted line, you want to become a member, you put your money up, and you're in. You know, that's it. There's no cost at all. I think they charge $50 at Dos Pinos for somebody to apply for membership. Also, a transfer or a sale is not a real estate transaction. So if you're in the co-op in a 3-bedroom with your family, and later on your kids leave and you want a 2-bedroom, you can move to the 2-bedroom, and then when your spouse dies, you can move to the 1-bedroom. All of those things can happen within the co-op without it being a real estate transaction. So it's very, very minimum cost, except I think that $50. In California, there are a couple of laws that apply that are useful to limited equity co-ops. So there's a qualified homeowners property tax exemption, and then the development of co-ops in California may qualify for an exemption from the Department of Real Estate, and that makes things move quite well. All right, now, about 3 years ago, I asked UC Davis if they could assign a student to me in the real estate world who could do a study. And the importance of the study is we took a look at the four different forms of affordable home ownership that we have in Davis. Dos Pinos is the co-op. Aggie Village is a land trust. The AOH program is affordable ownership homes, which are single-family homes that developers have done as a part of a policy of the City of Davis requiring X number of houses to be set aside permanently affordable. And then Southfield Park is it was meant to be a co-op, but the developer didn't want to do that, and he got out of it by convincing the council he could do the same thing if he did it as a limited equity condo. So here we are, sort of 20 years later or so for each one of these, and this is the monthly payment that is due at the moment for all of those. The last 2 lines are the rental market rate in Davis, which is $2,731 for a 3-bedroom unit. And all these comparisons are for a 3-bedroom unit. And then to purchase a market rate home in Davis, this is 2019. The numbers have gone up. So in 2024, the average home for sale in Davis is $1 million. And nobody we know can buy at that house. So that's the purchasing market rate. So then what I did is to look at it in terms of who could it serve, looking at the average income for a 4-member family. And Dos Pinos serves people at 55% of median income. Aggie Village is at 72%. The city's program is at 87%. And the limited equity condo is now at 119%. The rental market is 124%, the purchasing market 160%. Now, okay. I'm not sure you'll be able to read some of the small print on here, but what we did is to line up, going from left to right, Aggie Village, the Davis AOH program, Southfield Park, Dos Pinos, the rental market, and the homeownership market. And the first dark one is the price that they were available, the affordability level they were at when they first started. So in 1997, that was Aggie Village. And as you can see, Aggie Village over time, for 2019, is now available to people at 48% of, can't see my own numbers here, 60. Yeah, about 65% of median income. Dos Pinos, for example, started off when it opened, it was available at 110% of median income, and now it's available to people at 55. So you get affordable housing with a limited equity co-op, which lowers every year over the marketplace. Now, couple more slides and I'll be done here, but this one to me is the most important. I have been studying Dos Pinos since it started. I funded it when I was with the National Cooperative Bank, and I have kept the rates of rentals for the apartment building across the road that was built the same time and about the same size units. So here's the thing, and look at that right-hand column. If we move a family of 4 out of a 3-bedroom unit in the apartments across the road at market rate, we move them into Dos Pinos, in the first year that they live there, they will have, was it 16,000?
18,000.
Yeah,
18,000.
18,000 in their pocket. That to me is real money, and for people who are moderate income to be able to save 18,000 by moving into a co-op is a tremendous thing. Part of what I do get concerned about when people talk about equity is when, well, most people think of it, is when you live in something and you buy it at this and you sell it at that and you get the remainder. The co-op doesn't do that, but the savings in the co-op, to me, are more important than the gain over time, because families at 80% or 60% median income having 18,000 in their pocket. Now that was 2019. Here's what we have for 2024. Well, 2023, because I did the numbers up until December 31st, 2023. The average rent for a 3-bedroom unit is now $3,457. The same unit at Dos Pinos is $1,000 $371.
Wow. Big
And
difference.
if you have $2,086 savings per year times 12, you now are at $25,000 in savings per year. Now, the shares in Dos Pinos have gone up and up and up because it's now going to be celebrating its 40th year next year. The share for a 3-bedroom started off at $5,000. It's now $46,777. But if you think about it, you move into the co-op, you put $46,000 in there, your return on investment is 53.5%. I mean, it makes a mockery of capitalism. And it's a pretty amazing thing that happens. I want to say a couple of quick things here. I started working in Hawaii doing cooperative housing in the 1980s, and one of the people that made it so wonderful to come here and to help is Joanne Yukimura, who is here. She was the former mayor of Kauai, and Joanne has been just a fabulous champion of affordable housing in Kauai, and she wants to do a co-op. That's what she told me the first time we met 30 years ago. We haven't yet done it, but we're hoping
Yes.
that the one in Kauai that's now being done will be her wish come true.
Yes, Lourdes really wants the co-op to happen. Joanne has been wanting it to happen for 30 years. We all are pulling for it, yes.
I'll speak real quickly to the difference between the market rate cooperative, which you've basically described, and the limited equity co-op. The difference begins at the development stage, the very beginning. When you create your governing documents, your bylaws will have in that it is a limited equity co-op, easy for me to say. And in that, the amount of appreciation of value of that share is listed in that governing document. I have one, for example, that it comes to mind. In fact, that senior limited equity co-op model that I talked about out of Minneapolis, that model has baked in a 3% annual increase in equity or value. Okay, it's only going to increase by 3%. And also, they've tried very hard to make certain that they limit their increase in carrying charges to that same 3%. So this way, and now to your last question, if you want to sell your share, can you sell your share? Absolutely can. In a limited equity co-op, when you sell your share, you're not selling based on what the market will bear. You're selling based on that same calculation that I alluded to about the increase in value of that share.
And just to be clear on the way that it becomes affordable is not just that it's a co-op, affordability generally happens through a subsidy. So just like the city of Oakland has that program for land trusts and co-ops, that's where they're saying 30% of our monies are going to go towards this, so they're subsidizing it. Just in the same way as all these other, yeah.
One comment and a question for Fred. On what Lourdes and David were saying about the money saved, and part of the education should be that those savings that you get, you should put some of that into savings or, God forbid, investments, and then that money would grow over time and you'd have good money in the bank. The question for Fred, you talked about bankers not dealing with co-ops the way they do with their mortgagees when they're doing mortgages. Have you, or your association, have you approached Freddie Mac and Fannie Mae because they control the lion's share of the mortgage market, and if the other mortgagers, the other bankers would follow if they were to get on board with your situation.
Yes, Freddie and Fannie are partners in this process. The particular loan product that I talked about earlier, HUD's 213 loan, once that loan is goes through its processing, generally it can be sold to either Freddie or Fannie. And so yeah, they're partners in this, and they understand they understand the concept fully. In fact, there's also there's a 223F, which is another loan product that HUD insures. Again, it involves both of those agencies as well. But your point is well taken with regard to preparing on the front end. There are, in some cooperatives I've seen, that there is an operational reserve that's also required, not just it's a general operating reserve, not just the replacement reserve, but there are reserves to make sure that you're guarding against operational deficits.
So we have a few more questions, so.
Thank you so much for this panel. Is it possible to require permanent affordability for limited equity co-ops through statute? So that, like nonprofits, for example, I think you can pass on a nonprofit to another nonprofit, but I don't know if you, as a protection against a board just turning it into a condo and into the open market.
Hawaii has the same regulations as as California does. We had the Hawaii legislature adopt legislation establishing limited equity co-ops with the help of Laurie Carlson, who is here in the audience today. The wonderful thing about that is that 5%, it's written into the law, but another element that is in the law is that if the co-op dissolves or goes bankrupt or any kind of thing like that, all of the members get their shares back plus the interest that they earned. All of the debts of the co-op are paid off, and the remaining equity has to be given to a 501c3. So that is the way in which you prevent the members accessing the untapped equity.
Okay, thank you. And I mean, the other way Kenna and I were thinking about, or actually the advisory board and the provisional board, is if the county were to buy the fee land, then presumably that would keep it permanently affordable because you could make the master lease require that, right?
Absolutely.
That would be another way to do it. And finally, Fred, you talked about the importance of training a board. In fact, isn't it important to train all of the membership since they're the ones who elect the board? And you could conceivably have an uneducated co-op membership elect board members just because they're keeping the carrying fees low, which is, self-destructive in the long run, but obviously those people wouldn't know that or see that.
That's true. You make a very good point. All cooperative members need to be educated and trained on a regular basis. Exposing them to that information can be, in my view, as simple as having informative newsletters and information that you get out in your annual meetings, or because that's another thing in your bylaws, it's required that you have an annual meeting. So there's an opportunity, there's a platform on which you can provide that information. With the advent of electronic media, you can get information out to your folks as often as you desire. So there's absolutely no reason for ignorance. There's no excuse for ignorance. You can provide that information and should provide that information at every turn.
Aloha. I'm from Maui, where we had a housing crisis that already existed, and then we had this incredible fire cause so much destruction, but it has really thrown our entire county into upheaval as far as our housing situation is concerned. We've talked a lot about what happens when you sell and this and the other, but can we go back to the beginning? If we have a completely clean slate and we have a situation where all different types of people, whether they be single mothers, whether they be teachers, whether they be entertainers, that need housing, how do we get started with the process?
Starting the housing.
Call Fred. That was
Well, Fred would punch you off to a couple of folks who are much more knowledgeable at the National Association of Housing Cooperatives, but I will tell you the first thing has to do, it really begins with a conversation and the establishing the need. You understand what the need is, you decide that you're going to operate cooperatively, you're going to create, and then from a legal standpoint, you're going to get some folks at the table that are going to help you. You're going to get an attorney that is knowledgeable in cooperative, more importantly, limited cooperative. You're going to get, again, if you have to build something, you're going to get a team that will handle that piece of that puzzle. And at that point, someone in that professional team is going to put together a budget for either construction or acquisition. You'll know what those numbers are, and at that point, you then can decide how you're going to raise that money among the number of people that you have decided to cooperate. They may be able to finance that out of their own personal dollars if they have. They may need to go and get a loan if they need to get a loan. There are a number of lending institutions that do business with cooperatives. Not every bank will, not every mortgage company will, as we stated earlier. But there are some, David mentioned he used to work at the National Co-op Bank. They know co-ops. They know co-ops well. You also belong to, some of you belong to credit unions. Show of hands? Yeah. Did you know that they were a co-op? Show of hands? Aha. But then when you get your statement at the end of the year, and they tell you that you need to come and vote and you need to participate, then do you participate in their process? What? Okay, so it happens the same way in housing cooperatives, okay? And the reason why you don't is because you probably haven't educated yourself there. So it's going back to education, but that's really the process. Get that team together, get the numbers, then we decide how the money is going to be, how the money is going to happen, and then you move on to getting that housing situated where you can move in. And it may be an acquisition, like Waipouli is doing. Lourdes' group they're going to acquire the building from the current owner, and then they're going to, if it is using a 213 loan, they're going to make improvements that are going to make it, that is going to meet the Department of Housing and Urban Development's physical inspection standards, and then they're going to live happily ever after.
Right on. Thank you.
I'll just add a couple of remarks to that too. In Maui, this is probably 25 years ago, I was actually in discussion with the hotel owners about coming together, buying land and putting up housing for employees because of the difficulty. I don't know why it never got anywhere, because it was a good idea, and that could happen again. About 3 years ago, I was in Toronto, Canada, and I was marveling at a wonderful, very modern-looking building, which was a co-op for hospitality workers in Toronto. And if you were in the union, you worked at a hotel or a restaurant, something like that, you were eligible to join the co-op. And it was jointly financed by the union, the City of Toronto, and various other unions. So that's, a valuable thing to take a look at. Certainly should.
Were there other? I am curious, actually, because Oakland was saying how they now have a particular fund for co-ops. Is that happening in other cities as well, where they're dedicating revenue?
I have heard that there are some cities that are providing some funds for co-ops. I haven't seen how it played out as yet. And when it was mentioned earlier, I was curious to see how that's actually working in Oakland. It's working well. Okay. Yeah, I'd like to see how that money flows, and I'm going to ask some questions about that.
I'll just add that there are a couple of programs that are working very well in this nature. Probably the best one is in the city of Washington, D.C., where there has been created a co-op task force, and the city has devoted funds to helping develop co-ops and raising money to fund them. So that could be a place where you could look. It's happening on a smaller scale in New York City and a little bit more in Boston and Chicago, but it's all at very, very beginning stages.
And I just want to mention that you mentioned Toronto, David. There's a huge difference in the Canadian co-op model and the one in the States. I was just in Vancouver last month, and the speaker was the president of the Canadian Housing Federation. And the government funds all housing cooperatives. The budget that he shared with us was just mind-blowing. The number of units coming online was mind-blowing. And when he finished talking, I was inspired to advocate even more so. NAHC has a legislative advocate on the Hill. NCBA has a legislative advocate, 2 legislative advocates on the Hill, constantly moving the needle with regard to the cooperative business model in the ears of legislators. But every one of those folks send out calls to action and ask regular citizens to contact their elected officials and help to move that needle. And so I just want to mention that, because you ask about whether or not legislation can be passed in order to achieve these goals. The answer is yes, but it's going to take voices. And all those voices are in this room and all the ones that you're connected to.
Hi, I wanted to add to that a bit. Being from the city of Oakland and in government, we got pushed really, really hard from our land trusts and our cooperatives to incorporate this into our program. We were not going to even consider it because just traditionally we've dealt with regular affordable housing rentals, and that's what we were comfortable with, and that's what we knew, and that's what all of our loan documents did, and we were like, I mean, you know, government sometimes takes a while to move because we're not very nimble and we don't have a lot of flexibility and we don't have a lot of resources. So it really was because we had a advocate on city council, because she had a relationship with the Oakland Community Land Trust for many, many years. And it was through that relationship that she pushed in our program to have a portion of the funds go to cooperatives and land trusts. And now we're so happy that we do, but I know we're also, you know, we're still at the beginning stages where we're working with them very closely and to see how the long term will go with reserves and our operating and our, you know, how do we monitor. But it did really take a local champion to push it through, because to be honest, it's really hard to get government to try new programs.
Great, thank you for sharing that it happened. It took some, yes.
So Megan, you mentioning it took a local champion. Might I ask, who are these people that you're referring to? Yes.
It was a community organizer. Her name is Carol Fife, and she works for, Casa Justa, but now she's on the Oakland City Council. And then the other council member is Council Member Bass, Nikki Bass. she had a really strong relationship with the Oakland Community Land Trust. So the two of them together on council were the advocates.
Invite them to Maui. Invite Carol to Maui. I'm sure she wouldn't say no.
Kenna, I'd like to mention also, there is a natural synergy between community land trusts and cooperatives. One that can create some strength, because the co-op that I mentioned that went off the rail, if there was a community land trust involved, then the community land trust can add some of that stewardship that is needed.
Yep.
Because again, they're controlling the land, and so there's some additional. And I know one of the cooperative principles was autonomy and independence, but I believe in autonomy within boundaries. Okay, let's just not go completely rogue. And if a community land trust is there, again, there can be some regulations built in that were helpful regulations.
And we actually have Autumn from the Lahaina Community Land Trust here. So that's another person to help push this along.
Could I just add a little bit about the land trust? I got a degree in urban planning and architecture from UCLA, and I mention that only because one of the courses I took was with Ed Kirshner, who was from Oakland and started Community Economics, which is one of the biggest sort of advocacy developer organizations. But anyhow, in the course that he talked about a town called Letchworth, which is in England. Has anybody ever heard of Letchworth? Okay, all right. So Letchworth is kind of where the first community land trust really began, but the people will argue with me about that. The town owns all of the land.
Lexworth, England?
Letchworth, England.
Okay.
Town owns all of the land, and every piece of land is long-term leased from the city.
Wow. Okay.
And the money that they make every year is then invested in the community, and it's around about $10 to $20 million a year. It's a town of about 40,000 people. But in that town, in 1905, they created 4 housing co-ops. They still exist today.
Wow.
They're still very successful. And 30% of the people living in Letchworth live in those housing co-ops. So it's one of the highest rates of co-ops in any city in the world, except for probably Stockholm and Copenhagen.
I'm going to have to look this up. I'm very curious now.
It was created by Ebenezer Howard, and he loved co-ops, and he came to America to do it as well. But it's been a fabulous experiment that has worked so well.
Well, our day is coming to a close, but raise your hand if you learned something new today. Okay, great. Raise your hand if you're feeling just a little more hopeful that there's some stuff we can do. Okay, great. Also important. So I just really want to mahalo everybody for being here today. I know some people traveled from neighbor islands. You guys had to take flights, and you have hotels and all this stuff. And then you all for traveling from all over the country to be here. So I'm just so grateful for everybody that is here. And for tomorrow, it's going to be a shorter day. We have 2 sessions. We'll start at 9. The first is the power of government money. And then there's a second session on cost-effective construction, and I know Alan will be presenting about rebuilding after a wildfire in Paradise, California. So, yeah, with that, I just want to wish you a wonderful evening. Some people will be eating dinner at Moani's, which is at that mall next to the hotel some folks are staying at. So 7 p.m. if folks want to gather. They often have live music and just some decent food. And other than that, I'll see everybody here tomorrow. All right.